Hello, everyone, and welcome into crushthestreet.com. We're going to be discussing markets, the equities markets, gold, silver, Bitcoin, how COVID-19 is impacting the economy. And I'm going to be speaking to the ultimate contrarian right now, Tone Vays. He's a returning guest. And we're going to be talking about Bitcoin as well. I mean, this is an extreme stress test environment for us as individuals, markets, everything we thought that was safe and normal. I mean, this is a stress test environment, and what a different world we have right now. Tone Vays is popular for his YouTube channel, the Unconfiscatable Conference, obviously no conferences right now, and just really helping people understand markets and Bitcoin. And, he's become one of the leading experts and authorities when it comes to Bitcoin. So it's an honor for him to be on the show once again and to share his time with us. So Tone, thanks so much for coming on Crush the Street.
No, Kenneth, thanks for having me on again. It's been a while.
It sure has. And what a difference in the world we are seeing. So before we kind of get into it here, you were spending your time going around the world, spreading the gospel. And here we are doing this interview on Zoom in quarantine. So, how are you right now? And what's your take on the world at the moment?
Yeah, I'm pretty good. I should have taken the whole coronavirus more seriously. Unconfiscatable conference was in Las Vegas, and it ended right at the end of February. It ended like February 24th. And then March 1st, I flew out to Africa. And I planned on spending all of March and the beginning of April, basically traveling around Africa. And I got out of South Africa just before everything just shut down. I left South Africa March 19th. Ironically, that's exactly when the stock market bottomed out. And I wasn't able to take advantage of that opportunity. There were definitely signs that it was oversold at the time. We'll talk about how the market looks today. But I was like too busy dealing with trying to get a last minute flight, which was fully booked. Every single seat on the 16-hour flight was taken back to the US. So it was very, very interesting in this environment. But yeah, no conferences for a while. I'm getting back into trading. I spent the last couple of years traveling and teaching people how to trade. And now that I'm stuck in quarantine, it's a good time to get back into trading. I mostly trade traditional markets. And Bitcoin hasn't really given us much action in the last couple of weeks. It's kind of just been slow and steady. But yeah, that's what I'm up to these days, and planning to go out again once planes start flying again.
Well, that's great. Before we kind of get into each sector here, I want to kind of get your thoughts on these unprecedented government responses we're seeing to the coronavirus. My goodness, this $2.2 trillion package, this is the biggest response in terms of cost that I think the world has ever seen, even adjusted. I mean, you look at World War II or FDR, I mean, we're seeing a really expensive response to this pandemic, but the whole world is shut down. I know that we've never seen there's nothing to really even compare this to. You can try to compare it to something, but like when you have billions of people just stuck at home with the economy not going, this is a pretty serious thing. So just on a more macro level, maybe it links to some of the reasons why you like Bitcoin. What is your take on what we're seeing from governments in response to this?
Yeah, it is definitely unprecedented. You can put multiple events into one. You can combine the 1987 or 1929 stock crash. I prefer the 1987 because that one fell really, really quickly, but then recovered. And I was looking at this like the 1987 crash until the US government and most of Europe decided to shut down their economy and force every business that isn't what they call essential, though it's really interesting how their definition of essential, churches are closed, marijuana dispensaries and alcohol shops are open. So it's a very interesting definition of essentials. But
it's essential for anyone that has the job. It's not essential to everybody else.
Yeah. So at first I was looking at this like 1987, But with the economy still being shut down without definite statements that everything is going to be open back on the 1st of May, this creates a big problem. And it's hard to accept the fact that the market is rebounding so much. But I think that a lot of mistakes have been made with, how the money is going to get distributed. The Democrats, of course, want the money to go to the workers because they're all about the workers. They're all about socialism. They're all about paying you to stay home. Meanwhile, myself as a small business owner, my business will probably not open on May 1st. It will probably never open again because I have like just a few employees and it's not going to work. So 70% of Americans are working for small and medium enterprises of less than 500 employees. And while it's great to give these companies money or give the workers money or give the companies money to help the workers, a lot of these companies are not going to open. And this is the big problem. So while I am all for social distancing and I am for being careful, I don't think the economy should have been blanketed and shut down. I think there shouldn't be a distinction between essential and not essential business. If anything, there should have been a distinction on healthy people that are not going to die if they catch the coronavirus with a good probability, and people that are older, that are less healthy, that have a high probability of serious health issues if they catch the coronavirus. And that's how it probably should have been handled. And then the market could have recovered a lot faster. At the moment, I don't care how much money they print. If a lot of these businesses don't open back up, if a lot of people are too scared to travel, and tourism is a huge industry, I mean, this is great for the companies that are online. Like it seems to be okay for Amazon, but if people start to become generally poorer, they're going to be ordering less stuff. This has been great for Zoom, which obviously they're going to be making more money. But I don't think this is going to recover very, very well or quickly at this point. But before the economy got shut down, I was pretty optimistic.
So let's talk about that a little more here. In regards to the stock market, let's start there. And one thing I'd mention is, if I was to look at what they did with this 2.2 trillion, the Fed taking the balance sheet to, possibly $10 trillion here, this is money that's didn't have blood, sweat, and tears go into it yet. So at some point that economic energy is going to have to be put in. And I would assume that's going to mean higher prices at some point, which could mean higher prices for stocks, gold, Bitcoin, real estate. I mean, these are areas where this money can enter into and obviously hurt people who don't have the money to pay the higher prices in the coming years. I mean, in other words, inflation. So before you kind of get into maybe the S&P 500, let's say, maybe your thoughts on just how you expect this money to flow through the system.
So I'm still looking at deflation. I don't think, because the US government and the Federal Reserve, they're not just printing money for Americans. There is a huge demand for dollars all around the world. A lot of the countries, especially the developing nations, are a lot worse off with this global economic shutdown than even people in the US. So if the Fed really wants to create inflation, they needed to print like 3 to 5 times more money, which they didn't do. Now they printed enough, and we're watching the stock market rise, but obviously the stock market isn't rising because the financial promises that are being created by our government is flowing into the stock market. That's not true at all. The stock market is rising because of speculation, and things that are in motion in a certain direction tend to stay that way. So I don't see a lot of this money entering the stock market. I really do see a lot of this money trying to keep people afloat. I don't see that much speculation, and that's why I do expect a severe pullback in the stock market. I don't know if we're going to make new lows or not. That one is a little too early to predict yet, but we have just gone up quite a bit, and I do think that the market is due for a pullback. Now, gold and silver and Bitcoin, these kinds of assets, once again, I don't see them rising because of inflation. I do see them rising, and I'm still bullish on all of those assets. And I only became bullish on Bitcoin on March 14th, basically the day after the big crash in the price of Bitcoin, which took place March 13th. That was the day I stopped being a bear, which I've been for since mid-January 2018. So I was a bear for a good 2 years plus 2 months. And I finally became a bull on March 14th with that big capitulation crash. But I don't see those assets rising because of inflation. I see those assets rising because people are going to see them as more of a safe haven asset. One of the things that I'm seeing in the macroeconomic space right now is governments using this virus to create all kinds of additional regulations and all kinds of barriers, especially on the movement of money. I think they will use this incident as the reason to eliminate cash. If, for example, there is a run on the bank, and I think there could be a run on the bank if it appears that Trump is going to lose the election, and the more socialist the candidate up against Trump from the Democratic side is going to be, the more people are going to panic that that person is going to eliminate cash and go after their money and raise taxes. So if there is a run on the bank for people to withdraw cash, for people to put their money into gold as a safe haven, the government will try to take all kinds of drastic measures, the first of which is to eliminate cash, which is probably the best thing that will ever happen for Bitcoin. I just saw the headline today that the European government is looking to eliminate stable coins because they know that stable coins is an easy way for people to move in and out of crypto. So they're going to do everything they can to prevent people from accessing something like Bitcoin. And one of the ways that they can't control people getting into Bitcoin is the existence of physical cash. It's also how they can't control getting people in and out of gold. So in order for them to slow down the gold speculation, especially for the common citizens that want to do it anonymously, they have to eliminate cash. So I think there will be a big movement over the next 12 to 24 months to eliminate paper cash. And that's the biggest one I see, which makes me even more bullish on Bitcoin because it becomes more important and necessary than ever.
Absolutely. And maybe we could just start here with precious metals. I'm not sure if you're what
Sure.
you have. You're going to share your screen with us so everyone can be aware of that in case you're just listening to this interview here.
I'll try to be as descriptive as I can by also throwing out the actual numbers. So I do have the S&P 500 up.
Okay.
And I really did not expect the S&P 500 to have a rebound past the 38% Fibonacci line at 2653. We can say the same thing about NASDAQ or the Dow, even though the NASDAQ has been stronger because of the tech sector is doing very well. Now, I am a pretty big fan of sequential. It missed the low by a couple of candles right here. I have my green arrow, 2 candles early on the 18th. Many stocks did bottom out over around 18th or 19th, so it was perfect. We have broken that 38% Fibonacci line, and now I am looking at the 50 period moving average sitting at 2890, so not that much more, only 50 more points on the S&P, and beyond that, the 62% Fibonacci at just under 3,000, so 2940. That's as far as I'm giving the stock market before a correction. I don't know how big that correction will be. Let's go over to gold and precious metals.
One thing I want to say before you get into that, gold, we're really seeing some interesting things happen on the physical side versus the spot price. And maybe you can comment on that. I know you've had some interesting conversations, debates with Andy Hoffman in the past regarding, manipulation and whatnot. And so I'm not even trying to go one way or another on it, but we're definitely seeing very high premiums on the physical. That's really not being reflected, especially when you look at silver, for instance. You really can't get an ounce of silver for under $20. Mostly around $25 when you start to look around. So maybe you can answer that and also use and show us what you're going to show us here.
Yeah, so let's go to silver first then. It's fine. So I did enter a silver trade, and I talked about it publicly. I entered right at the low on March 19th because of TD9 sequential, and I exited today for the same reason, it being a TD9 sell on the same indicator sequential. So this was a pretty good trade. Now, I didn't capture the entire move of this trade, just to be fully transparent. When I bought calls right here, I sold calls against it as at a much higher strike. So I only captured 2/3 of this, and the rest was basically no longer profitable for me. But this is where I pretty much exited the trade for me personally. Now the premium, you got to be careful with this premium. Look, I know the gold bugs want to use this premium on gold and silver as some kind of sign. Guys, I'm sorry, it is not. The reason why there's such a huge premium, there's two reasons. One, silver fell a lot. So if you're holding onto silver and you just watched it fall from $20 down to $12 in a matter of weeks, you're not in a rush to sell your silver because you know it's going to go up in price. Nothing crashes like that, especially silver. So you're not going to take a loss on selling the silver if you have an inventory of silver. You're just going to sit it out and wait and sell it at a higher price. Also, most of the gold dealers, they're not essential businesses. They're closed. So how the hell are you going to go and get your physical silver or gold? And that's the biggest problem. And that's why the physical stuff has such a huge premium, because the supply chain is basically shut down because of the virus. I think everything will get back to normal and the premiums will be fine once the markets open up again. I don't think that's going to be a big issue. Now, I am still a little bullish on gold, but not at the moment. At the moment, I think they have gone up quite far. And like I said, I'm exiting my silver long position. I never entered the gold long position. I was just in silver. I thought it had a little more upside by percentage, which it did, because of the gold-silver ratio got very far out of control. Now, as for the correlation between gold and Bitcoin, I did this the other day on my channel. I'm actually going to use the monthly chart just so that it's easy to go back. Now, I'm the one that's famously said that gold crashed in 2008 along with the stock market, because when everything is collapsing, you're not exactly going to go and speculate on gold. You're going to need to feed your family. And if you're losing your job and you happen to have gold, you're going to be selling your gold. And that's why I am generally bearish on gold in times of major economic stress. When there is economic fear, gold does very well. But when there's actual economic stress, gold doesn't. And we can see right here that gold started to crash in March of 08 in line with the stock market. But gold bottomed in October 08. The stock market didn't bottom until March of 2009. That's 5 months later. So what happened during those 5 months? Well, while the stock market continued to make lower lows for 5 months, gold was up 47%. So while at first people panic out of all private assets like gold and Bitcoin, and we saw a big drop in gold early on in March, starting even late February into March, just as the S&P 500 was falling and the stock market. So we saw a big drop from 1,700 down to 1,450. And on a weekly scale, that pretty much started right in the beginning of March, just as the stock market started to crash as well. But I think now in the latter stages of the stock market drop, people are going to act a little more rationally, and they are going to look to speculate into gold, because you have to put your money somewhere. So, and that's why I've been bullish on gold over the last few weeks. And Bitcoin, I see it as the same way. We're going to head over to the Bitcoin chart. Yeah, we're going to look at the daily Bitcoin chart. Now, I really like the daily Bitcoin chart with timing, again, with sequential. For those that are watching the YouTube, there was a top call on Bitcoin on February 13th, which literally marked the very high in this price swing. And the buy indication came in on March 16th when it was trading in a big range between 4,400 and 5,300. The low came a few days earlier. I had already become a bull a few days before that. And the latest two markings that called the tops, one was March 26th, and we pulled back for a good $1,000 and change. And then one more came in about 7 days ago at a high of 7,400. But right now I am bullish. I am looking at this ascending triangle formation, and I do believe that Bitcoin will hold. Bitcoin has had a huge correlation with the S&P 500. Every time the S&P 500 drops, Bitcoin drops. Now, I've traced this correlation back over the last few years, but the big difference is just because the S&P 500 goes up and makes a new high doesn't mean Bitcoin has made a new high. Bitcoin has gone up and has been correlated, but the beta to the stock market is very, very variable. So we saw the big crash in Bitcoin along with the stock market all throughout March, and the beta of Bitcoin was incredibly high. Bitcoin crashed way more by percentage than the S&P 500 did. But now I think this is where Bitcoin is going to have a lower beta to the stock market. And even if the stock market starts to crash to new lows, I think people will now see Bitcoin as the safe haven asset, because in the early stages of a crash, cash is king. You want to get out of everything and go into cash because you don't know what's going to happen. But after you've had a few months to think about stuff, especially in quarantine, you start to say, you know what am I going to do with this cash? Especially if it's at the bank and I don't trust the bank because the banks could collapse. So after a few months of thinking, and you still see the stock market as way too risky, and as the stock market turns again, and if you have cash or now you're getting out of a stock market, you're going to look into where is my safe haven. And I think gold, silver, Bitcoin, maybe even oil, if it falls far enough down. If oil falls down to $15, $10, I can certainly see people say, well, that's not going to last forever. Oil's going to go back up. That's not going anywhere. So I can certainly see people starting to move some of that cash into more safe haven assets. And I believe now with Bitcoin and its halving coming up and having yet another year of full operations, no problems, no issues. The blockchain is still giving you blocks on average every 10 minutes. Every transaction is going through. People are starting to be more comfortable with Bitcoin. I know I have my friends and family calling me again about Bitcoin. And finally, after 2 years, I am starting to be helpful in having them acquire some Bitcoin, where all throughout the last 2 years, I'm like, nah, maybe you should wait, because I didn't want to get them into something that I had a very good feeling was going to go down, because I would not have had a very good day if I had gotten all my friends and family into Bitcoin over the last few years based on what happened earlier this month. So that's my view on all of those markets. Let me stop the screen share.
It's always tough to go to Thanksgiving dinner and deal with people who've lost money because of a recommendation you gave them. So that's a point well taken there. Tone, I'd like to, I appreciate your no BS approach when it comes to your analysis on the markets. No hype, just your opinions, your analysis based on the things you're seeing, which is great. And I think that's why a lot of people really respect the work you do. And so I'd like to ask you this regarding Bitcoin, and I'll reference what we're seeing in the gold and silver markets. I mean, gold is doing great, but when you look at the miners, they're basically trading, when you look at the GDX, where they were when gold was 1380, and gold is much higher now, but the confidence regarding the miners is not there. And I know there's maybe other reasons for that too, but the reason I bring that up is the more Bitcoin kind of tricks people, let's just say, or kind of goes up and goes down, doesn't quickly go back to 20,000, I think the harder it is going to be for people to get the confidence to go back in it, if that makes sense. The more it goes to 10,000 and back to 7, people will just be conditioned to not think that it's going to go to 20,000 the longer that goes on for. So, I mean, what's a realistic expectation kind of over the next few years? I mean, where do you see Bitcoin going over the next while?
That makes total sense. And that's actually what's necessary. A lot of times markets go up. I mean, the stock market has been going up for over 10 years since the 2008 crash. And how many people still don't believe that it's been rising because they've been saying it's not healthy every single day for 10 years? That's exactly what's needed. And I think Bitcoin is going to struggle. I think the road above 10,000 is going to take a while. I've been saying that Bitcoin will get stuck between 6,000 and 10,000 for the rest of the year, probably going into next year. So what I'm looking at is, I have a bet with a friend of mine. We made this bet actually last year when Bitcoin was sitting right around $10,000. And the bet that I made was that in the year 2020, Bitcoin will not close the day more than 10,000 for 90 days. So I'm expecting, I'm not expecting Bitcoin to be above 10,000 for more than 90 days in this year, 2020. And so far, it's only closed for about 7 days above 10,000, and we're already in May. I'm expecting
despite the halving coming up. Despite the halving coming up.
Yeah, and the halving is coming up, and a lot of people are expecting Bitcoin to just pop because of the halving, and I don't. I think this economic environment is going to keep people scared of getting into Bitcoin. People aren't really going to mass enter Bitcoin until it starts to break $20,000 again. So the big question is, when do I think it's going to break 20,000 again? And I think it's going to take longer. I'm looking at the best, the end of 2021. That's at best. Most likely, it'll be closer to the end of 2022, if not all the way out into 2023. While I am a bull on Bitcoin, I don't think we're going to go below 5,000 again. I really don't, though it's possible if the S&P crashes hard enough, but it would be very, very temporary if we do. So I'm a pretty big bull, but I think we're going to get stuck in this range. I think we're going to keep getting rejected by a trend line. I'm maybe going to do one more quick screen share and just look at a big picture on Bitcoin. And this is my big picture on Bitcoin on weekly charts. And I'm looking at this trend line pretty much from the very highs. And I do have another trend line here at the bottom connecting the low of 3,100 in late 2018 to the lows that we had in the middle of March. And this triangle comes to a tipping point right at current prices of 7,100, but a year from today in March 2021. So I think Bitcoin will just get stuck in this triangle for a while. Maybe it'll break out towards the end of the year, but I am expecting Bitcoin to just get stuck between 10K and mostly 6K for the rest of the year, and then break out eventually. And people are going to get scared. Some of the people are going to get upset that Bitcoin hasn't broken out because everyone is promising them that it's going to be $1 million tomorrow. Some people are going to get scared because after the halving, a lot of miners are going to come offline and Bitcoin hash rate is going to drop and the blocks could be a little bit slow. And the big companies like blockchain.com or .info, that's the biggest wallet for people, still refuse to add segregated witness, which makes transactions cheap and fast. And they refuse to do it. So for many people, transactions are still slow and they're still expensive because a lot of the companies don't want to add the latest technology. So there's lots of reasons to hate Bitcoin, and it's going to frustrate the bulls and bears alike, though there aren't that many bears in Bitcoin. But a lot of people are going to get scared. And the more people that are scared and the less people are rushing into it, that's what drives Bitcoin back to its new back to the all-time high. Once it breaks the all-time high, that's when it starts hitting the news. Everyone starts talking about it. That's when the masses start to get in. That's when the bubble grows. Most people get in at the worst time, and then they pay for it.
Powerful. And it'll be a real testament to Bitcoin as it goes through this. I know a lot of people similar to, Peter Schiff have that mindset that Bitcoin is worth nothing, has no intrinsic value, yada, yada, yada. It's going to get through this and it'll have that resilience embedded in people's minds, which I think will be powerful for it going forward here. Tone, I guess just some closing thoughts then. I mean, you talked about Bitcoin going back to 20,000. When do you sell? I know you've been open about Bitcoin being your retirement. You know, everything you have is essentially, you know, when it's all said and done, basically in Bitcoin, and you were open about that. So what is your exit strategy for Bitcoin? You know, does it get to a point where you're just like, okay, well, you know, I've had my run with it. It can keep going from here, but it's time for me to call it quits, like Charlie Lee. Sell at the top, and then that's it.
If I had Litecoin, if I held it that long, I would certainly sell it as well. But because I'm not a fan of the altcoins, you know, I don't know. I'm not materialistic at all. I still drive my 10-year-old car, which is 12 years old now. I've been saying 10-year-old car for like 4 years, so it can still be 10 years old. So I still drive my 2008 car. You know, I still have my apartment that I bought in 2008. I know not a good time to buy, but that was the first time I actually had some money to buy. Not because I was speculating on the real estate market, it's because I wanted to move out and get my own place. But so I'm not materialistic, so I'm never in a rush to sell, and I'm still pretty motivated and to keep doing what I'm doing. So until I have a reason to sell, I'm not going to sell. I'm just gonna retire one day. I'm getting older, so we'll see what happens. You know, if I get a family going, we'll see what I need the money for. Unless I actually need the money, I'm sticking with Bitcoin. I really do see it as the future of global currency. I do believe it will be this one global world currency, which sounds really bad, and it sounds like something that you know, the dystopian movies are made of, and Brave New World books and 1984 books. It does sound like that, but that's because it's always been from the perspective that there is a government, there is this human that controls this one world currency. But that's not true in the case of Bitcoin. No one is in control. So it's actually a good thing when it becomes this one global currency that the people are using, and those in charge aren't able to do anything about it. And the sooner that day comes, the better off everybody will be, in my opinion.
Well, I think this dystopian one world controlled government is being displayed at the moment with us in quarantine, unable to leave our homes.
Yeah, that needs to stop. They need to open up the economy as soon as possible. They need to put in common sense rules saying, hey, you guys can go outside. You can certainly go jogging in the park by yourself, or say with your wife or with your girlfriend. And you can open up your shops. Just, you know, make sure that healthy people are working in them. You know, wear masks, be careful, wash your hands. And got to get this economy up and running, because this is really, really bad.
A lot of people are going to die just because of financial aspects. If we're going into a depression, which I think we're already heading there, unemployment's going to be a big sign of that here as we go forward. But Tone, thank you so much for coming on the show with me today. Please just share some closing thoughts here. If people want to learn more about you, your work, your conferences, the things you offer, your consulting services, please let them know where they can go and what they can expect to find.
Yeah, sure. Well, might as well throw some screen share back on just in case. So it's basically over at tonebase.com. You can check it out. My bio is there. My products and services. I haven't been doing too many workshops. Just do on-demand videos teaching people how to trade. And the 3 conferences, the Unconfiscatable has already completed. That took place in Vegas. This was the Unconfiscatable Conference and Poker Tournament. The 2 conferences that I have coming up are the Financial Summit that takes place the first week of November in Bali, Indonesia. And we had to move Understanding Bitcoin. This is the event in Malta. It is now the first week of October. Other than that, you can check out my YouTube channel. Lots of podcasts, mostly financial, but occasionally we do law reviews, news shows. But pretty much, I've been doing them twice a day before market opens and after market closes, covering all of the markets.
Tone, thank you so much for your time. And my goodness, if those conferences can't happen because of a shutdown, we're really screwed at that point. So look forward to hearing about those and maybe even attending. So appreciate that. And thanks for coming on the show.
One final thought, kids, stay away from shit coins. You should recognize the emoji on my shirt.
All right, sir. Appreciate that.